Good morning and welcome everyone. This is Michael Venezia. I'm the head trader here at Tradeview Markets. This is Friday, July 17th. Our last webcast was Tuesday afternoon. I'll give you a brief headline. I'm going to go right into the action because anything that's been going on you should know or you can read as a major headline in any news channel. But with that being said, as of Friday morning, the Nasdaq, as of Thursday's close, the Nasdaq hit an all-time high. Helped by Netflix, Amazon, and this morning Google. Intel was a little bit of a hiccup, but we'll let that go. And that's no surprise in the semi group by the action in Micron, Texan, SanDisk, and the others. So the general broader markets has been helped by a major run in the Citigroup and JP Morgan. Goldman Sachs has a little bit of a hiccup yesterday, but the stock was down 1%, and certainly a $200 stock down 1%. There's no reason to cause a top on the banks. So let's get down right to it. What's been going on? All right, here we go. Chart on the SPYs. We last spoke on, as I said, Tuesday afternoon. This was where the market was, right here in the grease deal. The SPYs since then have gone from 209 to 212, 250-point move, and it's been led by Citigroup, which was yesterday. Even the run of Citigroup from 53 to 57, testing a year high before the earnings. Citigroup yesterday had tremendous volume, and actually if you should read into it because it actually had the best quarter it's had since 2007 before the banking crisis. But once again, Citi opened nicely. It had a high of the day at about 10.15 at $58, pulled into 57.76, and as you know, 10.30 the Nasdaq was breaking all-time highs, but I would see no reason why Citigroup would pull back at this point. So the stock went from 57.75, 58.60, closed there up 3%, $2 on the day. I'm not going to chase it. I wasn't in it, but you can see this type of move. Even the banks have this type of run. JP Morgan, same thing, testing year highs. That helped the markets Tuesday and Wednesday. Yesterday, the story, of course, was Netflix. Had earnings, blew out numbers. Even after the stock split, the stock was up 18%, $17, which somebody told me if it hadn't split 7 for 1, it would have been up about $170. But once again, let's look at the charts on the chart on the SPY yesterday. The market opened up pretty nicely, had a little bit of a range, but if you look at the Qs were hitting an all-time high at around 11 o'clock, and there was no reason, considering how strong Netflix, Amazon, and Google were, for there to be any type of reversal, especially going into numbers. So there's the Qs around 11 o'clock, they're breaking high. Netflix, of course, give you a little dip-diddy-do on the beginning of the old buy and dip to 110 to 107. I was actually shorted here, and I covered, which was a nice cover, but was more disgusting or bothersome that at that very 11 o'clock number when Netflix was taking out the open, they didn't purchase around 110 because it went right to 114 without a commercial. And certainly a stock that does this type of volume within a stock split is worth meriting. So you know what? I wouldn't be chasing Netflix. I would be buying it at the dips. It's probably going to consolidate like it did right here, the last breakout. We did a webcast right here. It'll probably do a little pullback and probably have a run regardless of where it's been. But let's look at Amazon, same thing, hitting all-time highs. We've been playing Google this morning, came out with numbers, even though the stock went from 546 to 605. Right now it's looking to be at $680. So Google has gone from 558 to 680 in about a week now within numbers. And by the way, I'm really not looking to to short the news here. If you do your homework, if you will, this stock is out of control. But I'll tell you a stock I am short overnight. I'm short this SHW, and it's not like me to be short of, what is it, a $250 stock? But it's had the best volume, 3 times its volume it's had in a long time. The stock was down and took the rest of the sector with it, which I thought put more credence in how bad the number in Sherwin-Williams. But it opened down for $20, rallied with the market from 11 to 11.30. That went from 266 to 257, closed at 261, and I took it because the market, as you can see, was strong into the close, and I thought this was a special situation even though it closed in the middle of the range. But with that being said, let's be trading the Googles, and Netflix. General Electric came out with numbers. This isn't really a time where I would try to pick tops on stocks. If the group is acting poorly, certainly go after the worst of breed in that group if the numbers are bringing the group down. But with that being said, I hope everybody had a good week. There's a lot more to do and disseminate and digest over the weekend, regardless if anything geopolitical happens, because we have a flood of earnings coming in, and this is a time, as our last webcast, what I said is stocks will be showing their hands more than normally. And once again, not to digress, but the VXX and the UVXY and the TVIX did only have a little brief week of play, or 2 weeks, and they're hitting year lows, by the way. So the fear index has been taken out of the market. So everybody can calm down on that end. But until then, everybody have a good trading day and a nice weekend. We'll see you on Tuesday. Thank you.